please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Let's talk about a couple of earnings that are due today. Big day for metals. We have Jsw Steel, Hindalco and Tata Steel as well. So let's take it straight to Nigel for Jsw Steel first. Nigel?
Well, good morning, Mangalam and Anisha. What a day it's going to be for me. We have all the big metal names that come out with their set of numbers. So as you all have asked for, let's go first with Jsw Steel. Now, the numbers should be quite good. The stock is virtually at an all-time high or a lifetime high. Now, in terms of a top line, we're working with a 15% growth. The margin should expand to around 22% approximately, and the profit number as well should look quite good. But that's really where all the unimportant numbers do end. For you're really looking at the matrix, what exactly are they going to do on an EBITDA per ton basis? So the big factor that will be driving these numbers are higher realizations as well as higher volumes. Now, we already have the production volumes with us. That's coming higher by around 5% on a year-on-year basis. They've achieved nearly around 99% of the total target for FY19. That's in terms of the production numbers. So the effective sales as well we are working with is a 5% growth odd. But the real driver is going to be the realizations. Remember, prices have gone up on a sequential basis as well. So higher offtake will really help in terms of the EBITDA per ton. You know, if you look at it, the coking coal cost as well have gone up, iron ore cost as well has gone up, but the realization should more than offset that. They have a small portion of longs. So longs constitute nearly around 20 to around 22, 23% of the total product mix, and the price increase there has been far more severe. So that's really what will help them in terms of an EBITDA per ton. Higher flat steel realization as well as export realization will further be the kicker for them. Let's keep it short then. EBITDA per ton, what is the number we're working with? 10,000 rupees on a per ton basis. That'll be much better than what they've done. But that seems to be the case why the street is factoring in. Also keep an eye out on a couple of smaller segments. The coated steels, for example, it's going to be coming on a high base because 160 crores odd in terms of an EBITDA number is on a higher base. So we'll keep an eye out on that factor. And also the US plate and pipes business, that will be included in the consolidated numbers. And we're expecting the profit number to continue out there. Remember, at one point of time, they were delivering a loss to them. Finally, management commentary, as important as ever.
Okay, Nigel, so we will watch out for Jsw Steel. You mentioned that high realizations is what will drive the growth. Is that the case for Hindalco as well?
Well, for Hindalco, you know, for aluminium, Manisha, that's going to be the play out there. Because for aluminium, Hindalco will make some more money because of the high realizations that they will get on the aluminium business. Remember, for copper business, it's the treatment and refining charges where they get their numbers. Well, top line growth, it's going to be more or less flattish. Remember, aluminium and copper prices are higher on a year-on-year basis. So the top line growth is going to be aided by higher LME prices, particularly aluminium. Margin should see some bit of compression. I'll explain exactly why, close to around 60 to around 70 basis points odd. Why will there be margin compression? Remember the TCRC, that's the treatment and refining charges on copper. That's compressed on a year-on-year basis. So that's going to be one factor that will play out. We have seen aluminium prices have surged up, particularly in the last quarter. But Hindalco hedges some part of their sales. So they won't benefit because the way the prices have gone up, some part of their sales will already be hedged. And also keep in mind, coal prices have moved up. So that's what will hurt them as well. Though we'll have to see how they're ramping up some of their captive coal. That's what could help them offset this big price increase. And finally, the aluminium business could see some compression. Why? Because they are buying their alumina from Utkal refinery. Now, Utkal comes in the consolidated business, but in the standalone business, it appears that they're buying it from Utkal. So in the consolidated numbers, it won't make much of a difference. But in the standalone business, it'll hurt them a tad bit. For aluminium, what kind of an EBITDA number we're working with? Roughly around 780 to around 790 crores approximately is what we're working with. Top line will be more or less flattish. Also keep an eye out on Utkal Alumina. There we're working with a number of around 450, 460 crores approximately. So keep an eye on that factor. And copper, as I said, TCRC margin should see some kind of compression. There we're working with an EBITDA number of around 390 crores. Remember, the PAT will get supported. They have been reaping some debt. So finance costs should be, a tad bit lower on a year-on-year basis. Keep your eye out. 2 p.m. I'm hoping to see Hindalco. 3 p.m. I'm hoping to see 3:30 is where we see Jsw Steel.
All right, let's hope that Tata Steel doesn't keep you waiting, but we'll get back to you on Tata Steel. Actually, in fact, we can ask you about Tata Steel as well. You are expecting a certain set of numbers, but before that, some development in the Bhushan Steel case.
Yeah, that's right, Mangalam. You know, we'll get to what we're expecting in terms of the numbers, but this is important. You know, the worst case scenario really is playing out for Bhushan Steel in terms of the shareholders that were hoping for a bit of a play out there. And for Tata Steel, in fact, there'll be a bit of a relief is what we could see, particularly in yesterday's trading session, is when the street came to terms with the enterprise value that they're paying for Bhushan Steel could be around 36,000 crores odd. So now the news piece came out late last night on the BSE. We have all the details with us. So they're going to be taking closer around 73% stake in Bhushan Steel for a consideration of around 160 crores. You punch in the math then, you know, they're doing it via wholly owned subsidiary. That's a BAM Nepal Steel Limited. So let's get the next few details up for us. If they're going to be taking around 72% stake for around 160 crores, that would mean that 100% stake will be around 220 crores. So that's telling you the remaining 60 crores, you know, that's a 27% stake for 60 crores. Out there, the holders will be banks as well as the current shareholders. So that means that the current market capitalization of Bhushan Steel is going to get squeezed into the remaining part of it, and that would mean that Bhushan Steel will be under some pressure. Remember, the total enterprise value is roughly around 35,200 crores. You put in the operational creditors as well, that's around 1,200, 1,300 crores. So in all, the enterprise value is nearly around 36,500, 36,600 crores, and that's sharply lower than the 40,000 crores or the 44,000 crores that at some point of time was reported. So a bit of a relief for Tata Steel because it's much lower than, you know, the earlier feared enterprise value. And for Bhushan Steel, the equity is going to get compressed, so that stock should be under some pressure.
All right, Nigel, thanks a lot for that. We'll keep an eye out on Bhushan Steel as well as Tata Steel.
Right, and also we'll have Tata Steel's numbers today, you know, so that's going to be later today. Let's hope that's not too late. So Jsw Steel at around 3 p.m. We'll see how they do. Hindalco at around 2 p.m. Tata Steel, I reckon
let's hope it's not 6 p.m.
No, it's going to be 6 p.m. What I understand, it's going to be 6 p.m. So we'll keep an eye out on that stock as well. In terms of the numbers, let's run you through the basic numbers, the top line, the margin, as well as the profit number. Quickly, let's get done with that. The same quarter last year, there was an exceptional item to the tune of around 4,000 crores approximately. But for Tata Steel, you're really looking at the geographic breakup. India EBITDA per ton, we're working with a number of around 15,000 rupees on a per ton basis. We already have the sales volumes with us. That's coming low by around 4% on a year-on-year basis. This market had already factored that in because they told us at the end of quarter 3 that at Kalinganagar there's a bit of a shutdown. They're hoping to make up the volumes in in their other unit at Jamshedpur. So the volumes numbers already factored in. The crucial number you're looking at is the EBITDA per ton of around 15,000 rupees on a per ton basis. Why they helped higher steel realizations? That's what helps them. You also see that the product mix has been moving quite well, and operating leverage should play out this time around as well. Tata Steel, they are protected to some extent in terms of the raw material costs that have spiked up. That's iron ore as well as coking coal. Iron ore, almost all their iron ore is integrated, comes in from captive sources. For coking coal, nearly around 35 to around 40% approximately comes in from captive sources. Moving to Europe then, over there we have the sales volumes. That's coming lower. There were a couple of shutdowns. They've sold some units as well. But the EBITDA per ton, that's the most crucial number. $75 on a per ton basis. On a sequential basis, we're expecting a sharp improvement. Remember, on a year-on-year basis, it will be lower. Why is that? Because the same quarter last year, you know, we did see they had a benefit of low coking coal costs. Southeast Asia should be more or less stable. We have the sales volumes as well over there, 0.6 million tons approximately. So important numbers, 15,000 rupees EBITDA per ton domestically. Europe EBITDA per ton should be at around $75 on a per ton basis.
Okay, Nigel, thank you so much for taking us through all those expectations from the metal pack. Remember, they were gaining in trade yesterday. But moving on to the pharma pack then, Lupin, India's second largest drug maker, reported its numbers yesterday. It posted a net loss of over 780 crores in the fourth quarter due to a one-time impairment provision on certain intangible assets related to Gavlis acquisition in the US. Archana Shukla caught up with the management to get more details on the pricing pressure as well as the growth outlook and the margin front of what the expectations are. Take a look.
We are not in that state of kind of disarray. I mean, even today our EBITDA margin is 21.5%, okay, right. Which obviously from our own standards is not as great as we would love it to, but I don't think one has to be apologetic about it. At the same time, our gross margins are at 66.1%, you know. Despite having a lower salience of our brand portfolio in the US. At one time it used to be 25, 28%, today it's barely 10%.
But would you be able to maintain your EBITDA margins around that 21% level for FY19?
Of course.
What sort of more cost rationalizations would FY19 have for Lupin?
You know, in the last year in particular on R&D, we really optimized it, so we cut down on some of the drug discovery spend that we were doing. We got external funding as well. And if you've seen in the last quarter, it's basically down to 10% of sales. And this is the level that we expect it to be, at least for the next 1 year. On the cost base itself, I think we've always done lots of projects. We've never done one big comprehensive project across Lupin. That actually is what we're actually undertaking starting tomorrow, actually, where we will kick off a holistic global project for the company, looking at every cost that there is, and clearly this is the year to tighten the belt, and this is the year to optimize to get the best out. So that's what we're just embarking on.
We would see you moving out of certain markets,
we do want to take that one-time scan. I don't think we're going to do anything as a knee-jerk reaction, but I think you have to be cognizant. If the US starts going to a place where complex generics make sense, not regular generics, then do you spend the same amount on R&D? Do you still have the same number of R&D people? If Japan goes into deep price cuts, do you still build on that? Do you build on specialty? So I think these are the questions that we're seeking to answer. And then we want to look at the entire organization footprint.
All right, that was the management of Lupin addressing their fourth quarter numbers. With that, we'll take a short break. Come back, we focus on the cues to watch from the futures and options space. Stay with us.
Welcome back. Well, let's talk about some more stocks that will be in focus today. Reliance Communication is on our radar. That is because NCLT has admitted a case, an insolvency plea against the company that was filed by Ericsson. Rima joins us now with more details. Rima, good morning. Tell us, what did Reliance Communication owe to Ericsson and what does this mean for the company now?
Well, this is going to be the second telecom company heading for insolvency. Aircell had filed by itself to get admitted into IBC, and now Ericsson has taken, that's the Swedish telecom maker, has taken Reliance Communication, and NCLT has admitted this plea. Reliance Communication owes Ericsson about 1,150 crore. Ericsson and Reliance Communication had signed a network management deal in 2014, wherein Ericsson was managing Reliance Communications network. On account of that, Arcom owed Ericsson 1,150 crore. So as of now, the news is the NCLT has admitted, Arcom in under IBC. Reliance Communications says they will decide the next course of action after studying the detailed order from NCLT. It's quite likely Reliance Communication will appeal against this order at the NCLAT. Let's see whether they can take that up. The stock has seen a huge beating, down 65% so far in 2018 already, on the back of that mountain of debt of 45,000 crore rupees, and all their previous plans to pare it down have gotten stuck. But this is fresh negative news for the company and the shareholders.
All right, Rima, thanks a lot for that. Fresh negative news. However, we'll have to see how low the price can be given the sort of correction that we've seen on Reliance Communications. We'll keep an eye out on that. But meanwhile, Manisha Gupta joins us with all the updates from the commodity space. Manisha, crude on top of your mind, as well as gold. That's a fresh 2018 low.
Oh, well, absolutely. The crude oil prices, let's start with that. And we did see 79 plus kind of levels onto that one. But since then, there has been some profit taking. That is because the markets have started to look into the spot crude cargoes, which are at a discount to future. So when you look at the data, you see that whether it's Europe or it's China, the backlog in sense of cargoes really seems to be building up to multi-month lows there. Apart from that, it also has to do with the kind of premium that the Brent is trading with right now, $7 higher than the US crude, $4 higher than the Dubai crude. Even the Russian Ural crude variety is trading at a very steep discount, almost at a 9-month low there. So that is what the markets are looking at, on the discord that there is between the future prices and the spot crude oil prices there. Apart from that, also what is weighing on the crude oil prices is the API data, which shows an increase of 4.9 million barrels in the U.S. inventories on a week-on-week basis. That has led to some profit taking. And then, of course, there is a strength in U.S. dollar. which is weighing across commodities. So whether it is crude, the base metal prices, or gold for that matter, everything seems to be under pressure because of the strength in US dollar.
Okay, Manisha, thank you so much for getting us that update. But let's talk about some more equities that have been focused. Well, Britannia reported its Q4 numbers yesterday. Manglan, the numbers looked in line, a volume growth of 11-12%, revenue as you expected. What were the key highlights as per you?
The numbers are as in line as it gets, Anisha. You know, revenue growth of 13% versus our poll of 13.5%. Domestic volume growth of 11%. We were expecting a range of 11 to 12%. EBITDA, 397 crores. What were we expecting? 390 crores. Margins at 15.6%. We were expecting 15.3%. Net profit came in at 263 crores. We were expecting 264 crores. So I don't see any problems with these numbers. In fact, they're good because because they're in line, it perhaps undermines the goodness of these numbers because the EBITDA is up 28%, the net profit too up 25% despite higher depreciation. Volume growth at 11% marks the second consecutive quarter of double-digit volume growth. That is a positive. What was a positive is also some management commentary coming in. They said they've witnessed positive momentum in market growth over the past few months. And with Britannia being the market leader, any growth in market momentum should help them. Prices of key raw materials have seen a marginal inflation in Q4. The management has guided for 3.5 to 5.5% in terms of inflation for their raw material basket. So that is something we'll watch out for, but cost savings has really aided their margin growth. They have been widening their distribution network, penetrating deeper into the rural market as well as weaker states, which is Uttar Pradesh, Madhya Pradesh as well as Rajasthan. So we'll keep an eye out on development there. International business accounts for 15% of their revenue, grew double-digit despite slowdown in Middle East and Africa. Finally, growth in dairy business, management said, was subdued because they are focusing on higher value-added products out there. So that is something we'll watch out for. And their priority will be to bridge portfolio gaps and get into the macro snacking business. I'm looking forward to the croissants that they launched in the second half of this year. The stock is at a record high, but I wouldn't rule out some profit taking though.
Okay, let's see how the stock reacts today. But Manglan, how are the cues looking as far as derivative space is concerned? You were telling us that VIX might see a significant move, and that is what we saw as well? That
is what we saw yesterday post the event. However, you know, yesterday the kind of cut that we saw from the top and as well as the cuts that the SGX Nifty is indicating, in light of that, the FII is actually bought in index futures. So if there is no follow through and the cuts continue as the markets are indicating, there could be a case for a lot of long unwinding, because the FIIs, they bought about 700 crores in index futures, added close to 6 longs per short position that the FIIs did buy, and the VIX, which was down about 8%, a lot of the smart money took advantage of lower IVs and bought index options to the tune of almost 3,000 crores. So there was a lot of long addition in index calls as well as index puts. So index puts were bought more, perhaps for downside protection. That was some anticipation out there. We'll keep an eye out on a couple of these strikes, 10,800 as well as 10,900. In terms of stocks, the one FNO stock we've been watching for the longest time, and we will continue to watch it today as well, it is PC Jeweler, because it re-enters FNO ban. Out of the FNO ban is IRB, and I will be watching out for Colgate, because yesterday most of the FMCG companies were under a bit of pressure. Hindustan Unilever also saw some selling at the top. Colgate was the one which ended at the high point of the day with a lot of long positions added. So we'll keep an eye out on that. Okay, so a lot of stocks as well as interesting cues lined up for the day today, but that is all the time we had on Power Breakfast. From the team and myself, thank you so much for watching. Bazaar Morning Call comes up next.